Have you ever dreamed of a life where money works for you, where you can sit back and watch your wealth grow effortlessly? Well, what if I told you that investing in real estate could make that dream a reality? Imagine building a portfolio of properties that generate passive income while you sip your morning coffee or explore exotic destinations. It's not just a fantasy, it's a tangible possibility. In this guide, we'll unravel the secrets of real estate investing, empowering you to harness its potential for building wealth and creating a life of financial abundance. Let me introduce you to Mike. Like many of us, Mike dreamed of a life filled with freedom and prosperity. But stuck in the rat race of 9-to-5 jobs and paycheck-to-paycheck living, his dreams seemed out of reach. Mike knew he needed a change, a way out of the endless cycle of struggle. That's when he discovered the transformative power of real estate investing. At first, Mike faced challenges and setbacks. He struggled to find the right investment opportunities and made mistakes along the way. But with perseverance and a willingness to learn, he began to see results. One property led to another, and soon Mike had built a portfolio that provided him with a steady stream of passive income. Mike's story is just one example of the countless individuals who have found success through real estate investing. Now, let's dive into the strategies and principles behind this transformative wealth-building tool. Types of real estate investments. Number 1. Residential properties. Residential properties, such as single-family homes, condominiums, and apartment buildings, offer investors a stable and accessible entry point into the world of real estate. These properties provide a steady stream of rental income, making them an attractive option for those seeking to build wealth over time. Additionally, residential properties tend to be less volatile than commercial properties, offering investors a sense of security and stability. Whether you're a first-time investor looking to dip your toes into the market or a seasoned pro seeking to diversify your portfolio, residential properties can serve as a solid foundation for your real estate ventures. Number 2. Commercial properties. Commercial properties cater to businesses and include office buildings, retail spaces, and industrial facilities. Investing in commercial real estate offers the potential for higher returns compared to residential properties, albeit with greater risks and complexities. Commercial leases typically involve longer terms and higher rental rates, providing investors with a reliable source of income. However, commercial properties are more susceptible to economic downturns and fluctuations in market demand. Despite these challenges, savvy investors can capitalize on opportunities in the commercial real estate sector to generate substantial profits and build long-term wealth. Number 3. Real Estate Investment Trusts, REITs. Real Estate Investment Trusts, REITs, offer investors a convenient and accessible way to invest in real estate without the hassles of property ownership. REITs own, operate, or finance income-generating properties, such as office buildings, shopping malls, and apartment complexes. By pooling funds from multiple investors, REITs provide diversification and liquidity, making them an attractive option for those seeking passive income and capital appreciation. Additionally, REITs are required by law to distribute a significant portion of their income to shareholders in the form of dividends, offering investors a reliable source of cash flow. Whether you're a hands-on investor or prefer a more hands-off approach, REITs provide a flexible and cost-effective way to access the benefits of real estate investing. Setting investment goals and strategies. Before delving into real estate investing, it's crucial to establish clear investment goals and devise strategies to achieve them. Whether your aim is to generate passive income, build long-term wealth, or diversify your investment portfolio, defining your objectives will guide your decision-making process. Consider factors such as your risk tolerance, time horizon, and desired level of involvement in property management. Once you've outlined your goals, develop a strategy that aligns with your objectives. For example, if you're seeking short-term profits, a fix-and-flip approach may be suitable, whereas a buy-and-hold strategy may be more appropriate for those looking to generate steady rental income over time. Financial considerations. When it comes to real estate investing, understanding the financial aspects is paramount. Considerations such as financing options, upfront costs, and ongoing expenses can significantly impact your investment decisions. Traditional financing through mortgages typically requires a substantial down payment and thorough credit checks, while hard money loans offer faster approval but come with higher interest rates. Private lenders provide alternative financing solutions for investors with unique circumstances. It's essential to evaluate the costs associated with each financing option and consider their implications for your overall investment strategy. Additionally, factor in expenses such as property taxes, insurance, maintenance, and vacancy rates when assessing the financial feasibility of potential investments. Calculating ROI and understanding tax implications. Evaluating the profitability of real estate investments involves calculating the return on investment, ROI. This metric considers factors such as rental income, property appreciation, and expenses to determine the overall financial performance of your investments. Additionally, understanding the tax implications of real estate transactions can help you maximize your returns and minimize your tax liability. Market research and analysis. Location is paramount in real estate investing. Conduct thorough market research to identify areas with strong growth potential and demand for rental properties. Analyze local economic indicators, demographic trends, and housing market dynamics to pinpoint lucrative investment opportunities. By staying informed about market conditions and trends, you can make informed decisions and maximize the profitability of your real estate investments. Risk management and diversification. Real estate investing inherently involves risks, but strategic risk management can help mitigate potential downsides. Diversifying your real estate portfolio by investing in different types of properties and geographic locations can spread risk and reduce exposure to market fluctuations. Consider factors such as property type, location, and market conditions when diversifying your portfolio. Additionally, implement risk mitigation strategies such as thorough due diligence, proper property management, and adequate insurance coverage. By proactively managing risks and diversifying your investments, you can safeguard your portfolio against adverse events and maximize long-term returns. Property acquisition and management. Identifying promising properties requires a combination of market knowledge and due diligence. Property inspections, legal checks, and understanding local regulations are essential steps in ensuring a successful investment. Effective property management, whether done independently or through a professional management company, is crucial for maximizing rental income and property value. Scaling your real estate portfolio. As you gain experience and accumulate capital, scaling your real estate portfolio becomes a viable option for expanding your investment holdings and increasing your potential for higher returns. Reinvesting profits from existing properties, leveraging equity through refinancing or lines of credit, and partnering with other investors are common strategies for scaling your portfolio. Consider factors such as market conditions, investment goals, and risk tolerance when determining the appropriate scaling strategy for your portfolio. By strategically growing your real estate holdings over time, you can diversify your income streams, build long-term wealth, and achieve your financial objectives. Passive income streams. Rental income is a primary source of passive income in real estate investing. Owning and renting out properties can provide a steady stream of revenue, albeit with some degree of active management required. Short-term rentals, such as Airbnb properties, offer another avenue for passive income, catering to travelers seeking temporary accommodations. Exit strategies. Having well-defined exit strategies is essential for managing real estate investments effectively. Whether it's selling properties for profit, executing a 1031 exchange to defer taxes, or planning for legacy preservation, understanding your options allows you to adapt to changing market conditions and achieve your financial goals. Investing in real estate offers a path to financial freedom and abundance. By understanding various investment strategies, conducting thorough research, and managing risks effectively, investors can unlock the full potential of this dynamic market. Whether you're aiming for short-term gains or long-term stability, real estate investments have the power to reshape your financial future and create a life of prosperity. If you found this video informative, then don't forget to hit that like button and subscribe to our channel for more amazing content. Thanks for watching.